Good morning. My name is John Regan. I am the reinsurance of the Americas CFO for SwissRe. I've been with SwissRe for about 8 years now, and since I've joined SwissRe, we have been on a bit of a finance journey and transformation. I thought it would be helpful at a high level to walk you through what that journey is. Kelly, if you could move to slide 4. I'm going to start with this slide. It's a lot of information. For anyone that was in Nashville, you'll recognize the style of this slide, although this is something that we had put together several years ago as a finance team. But I thought it helped kind of capture on one page the journey that we've been on, but it also may be relevant and useful for you if you're starting or thinking about a finance journey. And in terms of these finance transformations, I would say each journey is going to be unique for each company. It depends on your situation. It depends on your industry. It depends on how your company has been built up over the years. From a SwissRe standpoint, what I walked into about 8 years ago, while I'm covering the Americas, this is kind of consistent with all of the regions. There had been various purchases of small companies along the way. From an operational standpoint, we had a significant number of general ledgers out there. So what started our journey is that number one, it was taking us way too long to produce financial statements. We had a significant number of people because our processes were primarily manual and obviously inefficient in that regard. So we had a CFO who had a vision of moving all of our general ledgers into one. We had to go through an evaluation process to do that. Ultimately, we selected SAP for ourselves, but it could be any of the other major companies out there as well. So what brought us here? If I start kind of on the left-hand side, back in 2014 timeframe to about 2017, once the decision was made that we're going to move our general ledgers to one single general ledger on SAP, we needed to work out the project team, the plan as to how we're going to do that, the timeline, and so forth. The rolling out of those general ledgers happened by region in the approach that we decided on. But what I chose to do from an America standpoint in advance of the general ledger rollout happening with my legal entities was to try to simplify our legal entity structure. As I mentioned earlier, we had a number of legal entities that were acquired over the years. We had legal entities that were basically representation of management as they changed over time. And so we had a lot of entities that really weren't needed any longer, but had to be cleaned up in terms of merging them or eliminating them. I was able to reduce our number of legal entities by about 40%. And there were some other efficiencies that came with that in terms of closing certain offices, eliminating certain positions, and therefore providing a bit of savings as we were going into an expensive investment into our transformation. So wrapped around some of that legal entity simplification and the transformation over to SAP was an expense management concept that all of us have to deal with. On the lower part of this slide, what happens if you don't change? I think that, again, the answers are going to be a little bit different for each person that looks at this, but from our standpoint, what we envisioned if we didn't change and modernize ourselves was we're going to lose talent, to waste the efforts of people that had the ability to do a lot more because they were having to deal with manual journal entries or reconciliations and things like that, and not getting to work on things that were more meaningful and driving the company. We anticipated that we would lose some of the valuable talent that we had. As I said, if you don't change, you're dealing with very inefficient processes and therefore spending money that you really don't need to or could be saved and used for other things to invest back into the company. And clearly, I think that there would be missed business opportunities. The fact that we would have to spend so much time closing our books, reconciling, producing the financial statements, and then doing presentations, it meant that we weren't doing other things that could, again, help drive the business. If we move to the middle section, which is basically where we are right now, how did we get here? As I mentioned, as we were rolling out the general ledger across the various regions, we also chose, thinking about the cost of these transformations, how else could we modify our target operating model to allow us to increase efficiencies and produce some savings. Our approach was that we chose to utilize lower cost locations. For us, it was Bangalore and Bratislava. Ultimately, what that meant from an America standpoint is that I took 50% of my headcount and I moved them to Bangalore. Clearly, that decision is an extremely difficult one. It's one that I needed to work through with the local management in addition to our central team in Zurich. And it obviously led to a lot of sleepless nights. You're dealing with people that have been with the company for a while, and you need to take a very be very clear in the objectives, but also be sensitive to the people that you're going to have to talk to in terms of their jobs being moved out of the country. The target operating model, in addition to moving from a high cost location to a low cost location, we had to really push standardizing our processes. And that was one of the benefits that was coming out of a single general ledger across the globe. You could standardize processes, you can standardize controls. You could start to centralize some of those processes rather than having regional teams that are doing some of those processes. Now that everyone is on the same general ledger, you can have processes that could be centralized and cover all of the regions at one time, therefore eliminating some of the efficiencies in the overall model. You can do further automations as a result of having the one system, and the reconciliations became significantly easier. One of the other things that really comes about in this process is we're needing to change the culture, the underlying culture of finance, to have a mindset of being more of a business partner, a valued business partner that is driving change for the company, not just for finance, but for the company. And that means that we have to change our skill sets in terms of what is going to be most beneficial. Some of what's incorporated into this is data analytics, providing self-serve KPI tools. One of the things that I found is that we spent a lot of time developing reports for individual managers rather than coming up with a standard set of reports that could be used for all managers, and therefore then having a standard set of KPIs that we could use to measure across all of these teams in an apples to apples comparison. It's the elimination of those many finance teams, if you will, in the business area was a significant benefit to finance, because we were able to not only get a seat at the table, but it was a rather large seat because it was a single source of truth in terms of the numbers that were being presented to management. If I move on to what our FinRe aspiration is for 2024, the reason we're using 2024 for ourselves is that the company made a decision along the way here in the midst of our transformation that we are going to convert from US GAAP accounting to IFRS accounting. Anyone that is on IFRS currently will know that the changes that are coming from IFRS 17 and 9 are significant. So you can imagine the change from going from US GAAP to a completely new basis of accounting of IFRS, and what that means from a finance team while you're changing the underlying systems that you're utilizing. So yeah, as part of our original plan, I talked about the general ledger. We also made the decision to move our subledger onto SAP, and we're in the midst of doing that and anticipated being done across all entities by 2024. So when the decision was made that we were moving to IFRS, again, we're moving our underlying systems from a subledger standpoint at the same time that we need to learn a new basis of accounting and implement and execute on that new basis of accounting. So extremely difficult, adding more balls into the air while you're continuing to do your business as usual work. Kelly, if you can move to slide 5. What I wanted to capture here is what are some of the ongoing challenges that you have to deal with during a transformation. And I think everyone, the focus or the emphasis on any one of the 4 that I've identified here is going to change dependent on each of your organizations. But for me, talent, and I touched on this just briefly before, we needed to change of mindset from a finance standpoint. We need to become more of a performance culture, leadership from every seat concept. This is something that the company itself was driving kind of behind the scenes as we were doing our transformation. We then utilized it as a way of saying, okay, this is the goal of the company. How do we tailor it? How do we align it with what we're doing as a finance team? The skill sets that are required from the talent that we have, the associates that we have, is different than what has historically existed from a finance standpoint. You need people that have the digital and analytical skills, utilizing tools that hadn't been available before, whether that's Power BI or Python from a coding standpoint. We've actually provided training for our staff in terms of storytelling. In the past, it was more you provide the financial statements, you provide the variance, and you do some high-level explanations. We wanted to be a bit more dynamic than that, drawing in people in terms of our business understanding and utilizing the numbers to help support the business in terms of how we're explaining what's going well and what's not going well. And then lastly, and tied in with that last comment, how do you increase the business acumen and presence of your people? So we've provided various leadership training, courageous leadership. What does that mean? How does it affect each individual? You're dealing with a lot of different personalities and you're trying to pull them as much as they're pushing, you're trying to pull them into a direction that is completely different than how they've grown up in their careers and providing them with a vision and a goal that is different than what they may have planned out for themselves. So it's not an easy thing, and you can't rush it. It's something they have to be patient with, and it's something that through change management and active communication certainly can help. But it's something that you to really nurture along the way. If I move on to infrastructure and digitization, I think it's fairly obvious based on some of the other things that I've said, what I mean by this in terms of digitization. But you do need a balanced approach and as you attack this. You're dealing with some people that have been in your organization for 20 years, 30 years, and that transformation from what they've historically been doing to what now you're looking for them to do, they have that historical knowledge that you really need until this transformation is complete. And how do you balance them understanding that you need them for that purpose? You're going to try to upskill them in terms of exposing them to things, tools that they hadn't used before. And in some cases that will work, in some cases that will not work. And those cases when it doesn't work, how do you get the most out of that person until it's time for them to move on to do something different? So it's challenging. Number 3, IFRS and FPSL. IFRS, as I said, we're converting to IFRS. So the training that comes along with that is extensive. And it's something that we've broken down into kind of a scaling of how involved someone is with that process. Are they leading it? And therefore, they need to get the most detailed training. And it's upwards of 60 hours of training to those that are going to be more supporting, and the training that's involved there is probably closer to 30 hours, but everyone needs to get trained. And the FPSL, that's reference to the subledger within SAP that we're utilizing. As I said, people have gotten used to the general ledger, but we had multiple subledgers that we're still feeding into that general ledger. So while they're learning IFRS, while they're continuing with the business as usual, they need to also understand and learn a new system at a subledger level. And it's at a much more granular detail level than what they were used to, breaking things down by cash flow, so it allows for further analytics on an automated basis going forward. That change is significant and requires a lot of patience and training, and getting an understanding of how we expect this to be utilized in the long run. Number 4, organizational structure. The future view, and I've touched on some of these along the way. More centralized, more automations, reconciliations should be much more automated than anything that we've had before. Intercompanies should be eliminated in an automated fashion rather than having to manually go through and do those types of things. So you're creating capacity by that centralization, by that automation. The move from high cost to low cost locations is the way that we chose again to help fund the investment into this transformation. And what doesn't go away, and this is obviously something that was very important to me as a regional CFO, is I'm still going to need local experts and regional experts for both reporting from a statutory standpoint, from a financial planning and analysis standpoint, but then also how do we transform some of our people that had different roles before to be more value-added business partners, and what does that mean? And it's not just our vision of what that means. It's based on talking with the front office, what they're looking for, and how we can most help them understand their business from a financial standpoint. Kelly, if we could go to slide 6. And I'm going to move a little bit faster on the next couple of slides, just because it is very specific to SwissRe. What I was trying to highlight here is that finance can become a crucial contributor to the business, the reinsurance business from a SwissRe standpoint. But how do you do that? How do you get that message across? And this is something that, as a company, we're pushing more and more, because what we found in various surveys is that when you start at the highest level, there's a clear understanding as to what the goals of the business are and how we're going to get there. As you work your way down through the organization, that message is lost a bit, and the how tangible it is to them is lost. And so we felt that it was very important for us to, number one, understand at the company level, what is our goals, what are our must wins at a group and a parent company standpoint. How does that translate and align with what the reinsurance, so specifically into my business unit, how does that align with the must wins with reinsurance? And then this cascades down into, so what does that mean for finance in terms of what our must wins are to help support the reinsurance must wins and the company must wins? And then lastly, for me, how do I take that finance must wins and align it and define it at a regional level for all the people that are reporting to me? Having that alignment so that at any given time, if I went to the most junior person in the organization and said, what are our must wins? I would hope that they would be able to define them. That it might be slightly different than how I would define them, because I'm looking over all of the region, whereas they may be focused on what that means to their department, what does that mean to their specific responsibilities. But that's exactly what we're looking for in terms of defining what the performance culture is that we're looking for. How can each person add to that culture? So it needs to be tangible. You want each person to feel the ownership. And as I said, you want it to be understood and defined at every seat. If we go to slide 6, this is another visualization, and I'm sure that others can come up with something that works better for them. But what we were trying to represent here in terms of, as I present this out to the finance team, what are we saying here? And it's kind of a culmination of some of the things that I've talked about already. And that is, you need to define what your aspiration is and what you're trying to do. And when you take a step back and you look at this, what does that mean overall? We needed to take systems and people, and we needed to transform them. Number one, by going onto one general ledger, one sub ledger, by taking people that were used to more manual operations and making that more automated, And when you pull yourself back and you look at this, what are you doing when you do all of that? You're creating some capacity, whether it's in how people are utilizing their time, how they're utilizing their skill set in terms of driving business, and how can we then use the capacity that's created as you move through this transition in a different way. In some cases, you may use some of that capacity created and say, okay, I need to take some of those savings to the bottom line, and therefore you may eliminate some roles. But the way that we position this is that while we'll do some of that, our goal is really to change our the function of finance to be more value added to the business, and using that capacity to identify areas that we think are going to help drive the business and their decisions that they're making, whether it's clear understanding of their KPIs, being able to provide financial information and results in a more timely manner, that allows them to impact their decisions in a more effective way. And ultimately, how do we continue to develop and build the seat that finance has at the table? How do we become trusted business advisors? And that is our aspiration. So that is the journey from a SwissRe standpoint, where we started, what we've done along the way, and what we still have to come. Um, these journeys are not short, as you can tell. I said we started back in 2014. We're not going to be done until 2024. That's a long time for any project to run. So to continue to challenge your people, to push your people, requires a lot of communication, a lot of change management, and it's something that has worked well for us. The payback period in terms of when we're done with this, based on the amount of investment, is going to take probably another 7 or 8 years to recoup that investment. But I feel like at the end of this, that we're going to be at the forefront in terms of what we're going to offer as a finance team. Kind of if you envision a boardroom of the future, our ability to digitize our financial presentations and be able to drill down on information at the touch of a button, as compared to where we were 10 years ago, it's quite significant. That's the end of the presentation that I had planned. I know that there's a few questions that have come up along the way that I can address now, and then certainly if there's other questions, I can address them. If I don't get to them, we can address them separately, and I can send an email with responses. But a couple of the questions that did come out there, and these are more themes rather than specific questions. Number one, how did you address loss of legacy knowledge, skills, and capabilities as you offshored? Well, we had to work very closely with our HR team. Obviously, the impact on our local employees was going to be significant. We were moving about 50% of our people, those positions, to new positions that were created in Bangalore. And then those people in the local jurisdictions were going to be losing their roles. So we needed to work closely with HR on a financial package that would allow for the retention of those people, that once you get over the hurdle of the initial shock of the discussion about what's going on, how do you get them focused on identifying their processes, documenting their processes, and then training someone else to do those roles. It's a difficult balance, but the best way to do it is to treat people fairly. And we were able to work out a retention package with our HR group that we could apply to each of those individuals. And the feedback that we got predominantly, there's going to be exceptions, but predominantly was that people felt that they were treated fairly. And in many cases, we were able to help those employees get positions elsewhere within SwissRe. And in some cases, we became references for them as they looked for outside jobs. And everyone that did lose a job here, we can't say that when they moved outside that we were the sole reason they got those jobs, but we did provide training that we thought would give them the best opportunity to get those jobs when they became available. Included in that retention package was a bonus structure that would allow us to kind of hold them to the transfer and the transition of responsibilities in the most efficient and effective way. If they did it extremely well, and that included a few different things, including recordings of the trainings that they were doing, the documentation, that they were in a position to get a bonus that was 1 to 1.5 times their target bonus. And again, that worked very effectively for us. The second question is, did the journey begin with step 4? And did you have to work backwards from there? And I think what that's referring to is the slide, that the cartoonish slide. And I would say the answer is yes. We needed a a clear vision from the group CFO as to where we wanted to go. And if that was one single general ledger, one single sub ledger, that initially was the aspiration. And how do we get hundreds of entities off of various other legacy systems over to that? And then we had to work on the detail and come forward from there. But one thing I'm going to highlight is that as much as there was that aspiration and that vision back in 2014, there's been changes along the way. As I said, just recently in the last several years, the decision was made to move to IFRS accounting. So you need to be dynamic in terms of how you're looking at these transformations, and you need to show flexibility because things are going to change along the way. As much as you would like to have a vision and work towards it and complete it and then come up with a new vision, it doesn't work so cleanly that way in the real world. You have to be flexible and adaptable as changes do come along. Question number 3 and the final question is, how does your vision statement tie to the corporate culture? I would say that if I go back to the slide where we have the corporate goals of must-wins, and how we then align that from reinsurance down to FinRe, down to FinRe Americas. That's an example of how you create that alignment and using that vision statement, if you will. If as a company, our goal is to produce a company that is focused on our performance culture, not that that's our specific vision statement, but it certainly is what supports our vision statement, then how as a finance team, how as an AP unit or an accounts receivable unit, how do they as a department then live up to supporting that business culture? And that's really what it takes, is that every department needs to contribute to the success of the company. They need to understand how they are aligned with those must wins, and then they need to drive their position, their people, their processes to allow you to do that. But it does take patience, it does take time, and it does take money. So you need to understand what that investment's going to cost, and you need to understand what it's going to take to help pay for that investment, because no company is going to approve a large budget without understanding what the returns are going to be. So Kelly, I think that is it for now.
One other question I would love for you to touch on is what comes after 2024? So this big 10-year buildup, then what?
Yeah. Yeah, and this is something that we talk about every year. So our financial plan process is 3-year increments. So starting in July, August of this year, we will be looking at our financial plan for 23 to 25. We'd like to take, from a finance standpoint, what we've done is take stock of where we are in our journey. We have some hard deadlines in terms of 2024 because we've gone out publicly and said we are transitioning to IFRS as of 2024. So those things don't move. But what we're trying to push in terms of our performance culture, we have to be there from a general ledger and a sub-ledger standpoint. But that journey of being a valued added business partner isn't changing. And how do you then take it to another level? Once you get to the point where you have people that understand data analytics, they understand the tools that are available to them to help drive that. There are things that we haven't done because you have to get those skill sets first. So for us, it's going to be, how do we continue to drive the business? How do we identify the strategies that they've put in place? How do we analyze whether or not those strategies are working? And then once we have the data to support it and the analytics to support it, to be able to go back to them and say, this is working, let's continue to do that. This one isn't working, how do we make corrections to either help it get back on track, or do we make the decision that we need to move in a different direction and come up with a different strategy? I want finance to have one of the biggest seats at the table, one having those discussions. And the only way that we're going to get there is to, number one, get to 2024, and then to have a different vision for continuing to enhance the value that finance brings.